Listen to me carefully. Right now, in March 2026, the greatest wealth heist in broad daylight is happening in the crypto market. And no, I'm not talking about hackers or scam projects. I'm talking about how institutional giants banks, asset managers, and multinational corporations are currently shaking you out of assets that will be worth 10 or even 20 times more in just a couple of years. You open your crypto wallet, you look at the charts, you see another dog in a hat or a frog on a skateboard, making hundreds of % in profit in a single week. And then you look at Hedera. You look at HBA. 10 cents. The asset is hovering in this range, testing the nerves of even the most loyal investors. Retail is panicking. On Twitter and Telegram, people are writing, "The coin is dead, the supply is too big, it will never pump." This is exactly what they want. Smart money loves boring charts. They love it when the crowd capitulates and chases meme coins, leaving fundamental infrastructure-grade assets sitting at the bottom. Today, we are going to talk about the coin that is literally building the new operating system for global finance. We will break down 3 fundamental pillars converging right now to create the perfect storm for Hedera: the ISO 20022 standard revolution, the multi-trillion-dollar tsunami of real-world asset, RWA tokenization, and unprecedented institutional demand that is already translating into spot ETF filings. By the end of this material, you will understand why 10 cents for HBAR is not a weakness. It is your last chance to board the train before Wall Street closes the doors to regular passengers forever. Let's start with the most painful question. Why 10 cents? If Hedera has such amazing fundamentals, if its governing council includes Google, IBM, Boeing, Dell, Hitachi, and Mondelez, why isn't the price reacting? To understand this, you need to realize the difference between price and value. The crypto market, especially in its current phase, is 90% driven by speculation and hype. Retail investors buy narratives. They buy what is shiny today. But corporations don't work like that. When Google or South Korea's Shinhan Bank decides to integrate a new technology, they don't look at 1-minute candles on exchanges. They spend years on testing, security audits, and legal compliance. HBAR is currently in an accumulation zone. This is the period when weak hands those who bought the hype, hoping for quick 100x gains desperately sell off their coins. And who is buying them? Those exact institutions are scooping them up through over-the-counter, OTC deals, and hidden orders, preparing for ETF launches. Compare this to buying Amazon stock in 2002 after the dot-com crash. The company was already revolutionizing logistics and capturing the market, but its shares traded for pennies. Today, HBAR is the technological equivalent of Amazon for Web3. It is the highway on which the money of the world will travel. Now let's break down why the situation is about to change. And the first reason lies in the ISO 20022 standard. ISO 20022 is the new international standard for electronic data exchange between financial institutions. The world has changed. Banks need instant settlements, massive amounts of data in every transaction, and total transparency. By the end of 2025, the entire global financial sector completed its core transition to this standard. Blockchains must also be able to speak this language. There are tens of thousands of cryptocurrencies in the world, but only a microscopic handful were natively built to comply with ISO 20022. It is a closed, elite club. XRP, XLM, Algo, QNT, XDC, and HBAR. Why will banks choose Hedera? Because of the Hashgraph technology. Blockchains like Ethereum or Bitcoin have one fatal flaw for banks: a lack of guaranteed finality. A transaction can be reversed if the network forks. A bank cannot send $1 billion and hope the network probably confirms it in 10 minutes. Hedera achieves absolute 100% finality in 3 to 5 seconds. Always. Furthermore, fees on the Hedera network are pegged to the US dollar. Sending a token always costs exactly 0.0001, regardless of whether HBAR costs 10 cents or $10. For the corporate sector, this means the ability to forecast a budget years in advance. But cross-border payments are just the warm-up. The main catalyst is RWA, real-world asset, tokenization. Larry Fink, CEO of BlackRock, stated plainly, "The next generation for markets will be tokenization of all assets. Real estate, government bonds, money market funds, everything will be moved to the blockchain." According to BCG and Citibank, this market will reach $216 trillion by 2030. Enterprises need security, predictability, and protection from manipulation. On Ethereum, creating a token smart contract requires writing complex code, where the slightest mistake leads to a hack. On Hedera, tokens are minted at the native network level via the Hedera token service. They are built into the core and possess the same ironclad security as HBAR itself. This is already happening. British giant Aberdeen is tokenizing funds. The Red Swan platform is tokenizing billions in real estate. And ESG projects are massively migrating to Hedera due to its incredible energy efficiency. Now let's connect the technology to real money. How can a traditional Wall Street investor profit from Hedera's growth? They need a legal, insured instrument to spot ETF. And this is exactly what Canary Capital Group and Grayscale are fighting for right now. The application from Canary Capital to create an HBAR ETF is a physically backed fund. This means that for every share sold in the stock exchange, the fund is obligated to buy actual HBAR tokens and put them into cold storage. This creates a massive supply shock. Tokens leave the open market forever. Institutions don't spend millions fighting the SEC for no reason. They already have clients lining up to buy hundreds of millions of dollars worth of HBAR. But wait, the crypto skeptic will say, HBAR has a 50 billion coin supply. Inflation will kill the price. Let's destroy this myth right now. The 50 billion figure was designed so the network could handle microtransactions on a global scale for centuries to come. As of 2026, over 75–80% of all HBAR is already in circulation. The period of aggressive early investor unlocks is entirely behind us. Moreover, when enterprises pay network fees processing thousands of transactions per second, they are forced to buy HBAR from the market. These tokens are used to pay rewards to those staking their HBAR. Billions of coins are already locked in staking. Add to that the tokens locked in ETFs and enterprise treasuries. The actual liquid supply is rapidly shrinking while demand is skyrocketing. Let's talk specific numbers. At the current price of 10 cents, Hedera's market capitalization is around 3.5 to 4 billion. For a project backed by Google and IBM, this is an insulting undervaluation. If HBAR merely reaches a 35–40 billion market cap in the current cycle, we get a price of exactly 1 per token. That's a 1,000% gain from the current 10-cent levels. And what if all catalysts trigger simultaneously? ISO 20022 integration, massive RWA tokenization, and spot ETF approvals. In this scenario, 1 is just a pit stop. We could easily see HBAR sitting between 1.5 and 2.5 at the peak of euphoria when institutional capital floods the market. And those who laughed at you for buying a coin at 10 cents will be lining up to buy it from you at $2. I want to be absolutely honest with you. In the world of investing, there are no 100% guarantees. This is cryptocurrency, and there are always risks. By buying HBAR at 10 cents, you must be prepared for local dips. But if you are an investor with a 1 to 3 year horizon, if you look at fundamentals rather than the emotions of the crowd, then this current zone is a gift. Wall Street has already made its decision. They are building the pipes through which their own money will soon flow. Your job right now is to buy a piece of those pipes before the water is turned on. Hedera Hashgraph was built to be a permanent, trusted layer for the entire internet. And right now, you have one last chance to take a position alongside the giants. Reminder, I am not your financial advisor. Everything stated is my personal analytical opinion. Cryptocurrencies are high-risk assets. Always do your own research and never invest more than you can afford to lose.